What if I told you that one simple mistake could secretly cost you thousands of dollars over the years? And the worst part is that many people don't even realize they're making it. That mistake is damaging their credit score. Most people think a credit score is just a number that appears on a report. But in reality, that small three-digit number can have a huge impact on your financial life. A good credit score can help you qualify for lower interest rates, better credit cards, cheaper car loans, and even make it easier to get approved for an apartment. But a poor credit score can quietly cost you money in ways you may not notice. You might pay hundreds or even thousands of dollars more in interest on a car loan. You might receive worse credit card offers. You might have a harder time getting approved for financial products you actually need. The good news is that improving your credit score doesn't require complicated strategies. It starts with avoiding a few common mistakes that many people make every day. Today, I'm going to show you 3 credit score mistakes that could quietly cost you thousands of dollars, why they hurt your credit, and exactly what you can do to avoid them. Let's get started. The first mistake is missing your payment due date. This is one of the most common and damaging credit mistakes people make. Some people think that paying a bill a few days late is not a big deal. They might think, I'll just pay it when I remember. But your payment history is one of the most important factors that affects your credit score. When lenders look at your credit report, they want to know one thing. Can they trust you to pay back money on time? A late payment can send the wrong message to lenders. For example, imagine someone named John. John has a credit card and always pays his bills. But one month he forgets about his payment due date. Because he was busy with work and personal responsibilities, he pays the bill a week later and thinks everything is fine. But that one mistake can potentially damage his credit score and remain on his credit report for years. A small moment of forgetfulness can create a long-term financial problem. So how can you avoid this? The easiest solution is to make your payments automatic. Most banks and credit card companies allow you to set up automatic payments, so you never miss a due date. You can also create calendar reminders on your phone a few days before your payment is due. A few seconds of planning today can save you years of financial stress in the future. Now let's move to the second mistake, using too much of your available credit. This mistake is known as having a high credit utilization ratio. Let's say your credit card limit is $1,000. If you regularly use $900 of that limit, your credit utilization is around 90%. Even if you are making your payments on time, lenders may see this as a sign that you depend heavily on borrowed money. Think about it from a lender's perspective. If someone is constantly using almost all of their available credit, it may look like they are under financial pressure. That doesn't mean using a credit card is bad. In fact, responsible credit card use can help you build a strong credit history. The problem happens when your balances stay high compared to your credit limits. Many financial experts recommend keeping your credit utilization below 30% whenever possible. For example, if your credit card limit is $5,000, keeping your balance below $1,500 can help your credit profile look healthier. One simple strategy is to pay down your balance before your statement closing date instead of waiting until the payment due date. You can also request a higher credit limit if you qualify, because a higher limit can lower your utilization ratio. Remember, the goal is not to avoid credit completely. The goal is to show that you can use credit responsibly. Now let's talk about the third mistake, applying for too many credit cards or loans in a short period of time. Many people receive offers for new credit cards with rewards, cashback, or special bonuses. It can be tempting to apply for every offer that looks attractive. But every time you apply for new credit, the lender may perform what's called a hard inquiry on your credit report. 1 or 2 hard inquiries usually are not a major problem. However, several applications within a short period of time can make lenders more cautious. They may wonder why you are trying to open multiple accounts so quickly. For example, imagine someone applies for 3 credit cards, a personal loan, and an auto loan within a few weeks. Even if that person has good intentions, lenders may see this as a sign that they might be searching for extra money. Because of financial problems, a smarter approach is to slow down. Only apply for new credit when you genuinely need it. Before applying, research the card or loan carefully and make sure it matches your financial goals. Every financial decision you make today can affect your future opportunities. Let's quickly recap the 3 mistakes that can quietly damage your credit score. Number 1, missing your payment due dates. Always pay your bills on time. Use automatic payments or reminders so you never forget. Number 2, using too much of your available credit. Try to keep your credit utilization low and avoid carrying extremely high balances. Number 3, applying for too many credit accounts too quickly. Only apply for new credit when it makes sense for your financial situation. Building a strong credit score is not about being perfect. Everyone makes mistakes. What matters is creating smart habits and following them consistently over time. A strong credit score can give you more financial opportunities, save you money, and help you achieve important goals in life. The small decisions you make today can create big results in the future. If you found this video helpful, subscribe for more easy-to-understand personal finance tips that can help you save money, build better credit, and make smarter financial decisions. Thanks for watching, and I'll see you in the next video.